Hello, this is Joe Nelson with Clear Capital Group, and today we're going to talk about how to get business loans with bad credit, no collateral, or cash flow. A lot of us find ourselves in that position, and what we like to call it is the cash flow access problem. Most business owners go to their bank when they need money. In fact, most consumers do too, right? It's the most convenient thing. It's the first thing that comes to mind because we have our savings there, we have our business bank account there, and so that's the first place we go. But according to the Department of Revenue, less than 2% of all business loans actually come from the big banks. Now, 2%, that's awful small. So these banks are very conservative, and the business industry, especially if you're less than 2 years in business and your revenue isn't very solid, maybe you have some seasonality and some fluctuations in your cash flow, banks simply aren't going to look at you, and they view it as being very risky. And we all know those statistics, right? Especially when you're an entrepreneur and you're talking about that you want to start a venture. You talk to friends, family, neighbors, and they inevitably say, well, get ready to go live in an apartment, downsize significantly. Basically they're priming you to fail in the first 10 years. The result is that 89% of business applications are typically denied, and this is what the Small Business Lending Index is telling us. And a lot of that denial is based on credibility for your business. Oftentimes, when you go and apply for a loan, your application goes into an automated system which will filter and sort based on qualifying criteria. And a lot of those are very basic. And through the Business Credit Suite, which we offer our clients, and through other consulting services, we talk about those 20 different points of credibility that need to be established before you ever go and fill out your first application and submit for any kind of financing for a business. Also, Bloomberg says funding a new small business, don't bother with the banks. Obviously, there's a pattern here. Even though most struggle to get money, 86% of small businesses rely on some type of credit or financing for survival. This is the National Federation of Independent Business. A lot of business owners that you speak to or network with, most of them aren't real open, and it's not a topic of conversation about, well, hey, how do you fund your day-to-day business? But you will find that the majority of small businesses rely heavily on personally guaranteed personal credit cards, home equity lines of credit, private loans from friends, family, neighbors, or coworkers. And so there's an awful lot of risk that they're taking to fund their business. And here at Clear Capital Group, through the Business Credit Suite that we offer, we like to teach and help these small business owners and entrepreneurs start off on their endeavor, their venture, without having to sign anything on a personal guarantee. It's really not necessary now to risk your personal assets, and this is what these webinars and videos are all about, is helping to teach you the process of how to build business credit so that you don't have to go and sign your life away and potentially bankrupt yourself in the personal private realm. Per the SBA, major reason for business failure is insufficient capital and lack of adequate funding. So a lot of people just think, oh yeah, businesses fail because people don't know how to run businesses. No, business in general really isn't that hard, right? You have a product or service, you find customers for that product or service in the market, and then you deliver. But oftentimes there's a gestation period where you really need to plant that seed into the market, cultivate it, nurture it before it starts to sprout and bear fruit. During that time is when a lot of businesses, because their cash flows aren't flowing yet, run out of capital, and they don't have any other avenue to get more capital to last them until they start to produce some profitable revenue. So the cash flow access problem continues. Since most small businesses can't easily get the money that they need, that leaves over 9 million, I would say much more than that, American businesses that need money can't get it. And this is according to the National Small Business Association. So these are the folks, who track all the statistics across the United States about what's happening with these 9 million businesses who can't get it. More than likely, you're one of them. I know I was. If so, you're going to love what you're about to learn. And again, this is going to be a theme that we talk about in every one of these educational videos. It's all going to point to building business credit profile through your business entity. And it doesn't matter what entity you're using, as long as it's a legally established entity. We'll go through all of that, probably not on this video, but on many others. So if you're looking for money for your business, there's great news, because there's actually billions of dollars ready to be lent to small businesses, but most of this money will not come from those large and big banks. The real problem isn't that there isn't money to borrow, it's that most business owners don't know where to go to get it approved. And that is exactly why I started Clear Capital Group. I myself was a real estate investor, and I got to a point where I ran out of my own money and I needed more. The big banks and credit unions wouldn't touch me, even though I had a profitable portfolio going, cash flowing, equity growth, low turnover on tenants. Everything was going well. They just wouldn't take that risk. And then, I went and I learned about the alternative lending market, the private lending market, and where billions and billions of dollars of smart money is there for people who will make a good rate of return for themselves, their business, and for their lending partner. And so that's what we do. We consult with folks and help them figure out where to go get that money, and not only where, but how to get it. Conventional financing, and this is going to be something that you're probably very familiar with, or at least have heard of. All the big banks and most smaller banks use SBA loans as their primary business funding program. Why? Because these bank loans are guaranteed up to a certain percentage or dollar amount by the U.S. government that says, okay, bank, go ahead and lend this money to this individual or business, and if they default, we're going to reimburse your expense, or that loan amount that you've given to that individual or business. And so most big banks and credit unions, because they are conservative, quote unquote, you can't see that, but some would argue what that really means. But anyways, so a lot of times they'll deploy this capital through the SBA program and guidelines. And inherently, because the money is guaranteed, and because you're bringing in a third party, the government, to guarantee these funds, the requirements and qualifications get even more stringent. And a lot of people start the SBA process, but because it is so long, so document intensive, they simply give up halfway through, or sometime in between before they're actually funded. So the SBA loans are also tough to qualify for, because the lender and the SBA will evaluate all aspects of the business and the business owner for approval, which means you have to hit all the marks 100% of the time in order to make one of these. So you need to be near perfect to get approved for one of these. And if you're not, then you have to start signing over huge amounts of your personal assets, like your home, automobiles, 401k, qualified plans, retirement, all that kind of stuff. And so to get approval for conventional loans, you must have excellent personal credit, no derogatories, excellent bank credit, keeping over $10,000 liquid in your bank accounts, and this is business bank accounts, by the way. Excellent business credit with a PAYDEX score of 80 or above. Now, these last 2 points we teach through the Business Credit Suite. How to do that within 150 days. You'll need to have excellent financials to prove that you have a great operating business that's growing. In addition, you'll need to have all your cash management, balance sheets and financial statements, etc., and personal, business and personal. You'll have to have substantial collateral. This is what we talked about earlier, sometimes equal to 100% of what is being borrowed, and you have to match that with your personal assets, which is incredibly difficult to do. And most of us are starting businesses because we want to create income, and so that we can acquire assets that will continue to build wealth for ourselves and our family and what other purpose we have in mind. And so it's kind of backwards. The old adage is, or you've heard frequently, you go to the bank when you don't need it, and that is very much the case with SBA. Other items you'll need is profit and loss statement, and these all must be current. So oftentimes when you're going through this long, arduous process, you'll submit documentation, and then 3 weeks later they'll say, okay, we need the same documentation but updated, and that'll be an ongoing thing. Current and projected financial statements. Again, you're going to have a business plan, very detailed projections, 2 years, broken down by quarters, and then monthly. Business license and certificate, that's kind of a no-brainer. And then your loan application history. You need to show that you haven't been out there knocking doors and putting applications everywhere. They'll find that out simply because they'll pull a personal credit history and it'll show inquiries. It's kind of like a track record. They'll see exactly where you've been. And so we'll teach you how to become so prepared based on knowing their guidelines, their qualification guidelines prior to application, that your approval likelihood goes through the roof. So a lot of times people do not prepare for financing. Financing is a last resort for them, unfortunately, and it should be the first thing. Income tax returns, there you go, lots of things. Resumes, obviously. If you have partners or owners, even if they're passive or silent partners, if they own more than 21% of your business, all of their information needs to be included as well, and that creates all kinds of issues. Personal background information, business plan, business credit report. Moving forward, income tax, yes, business overview and history. Man, there's a lot. Personal credit. Your lender will obtain your personal credit, of course. However, you should obtain a credit report for yourself first. Learning and understanding what your credit report is, how it's reported, what things should reflect, what things should not, how to dispute inaccuracies and blemishes is critical. And you can do this all on your own, and we'll actually do a training or a free video that'll walk you through very in depth on how to analyze your own credit report and how to figure it out. And we'll do that here in the coming weeks. It's critical that you try to clear up these before you begin the application process, right? Yeah, preparation is worth its weight in gold. Continuing on, bank leases, bank statements, certificates, licenses, histories, proof of collateral. All of these things go into your SBA or your conventional type loans. Legal documents. So if you're obviously going to be doing this for a business purpose, so you're going to have to bring in your LLC, C Corp, S Corp, whatever LLP kind of information that you're going to be bringing in, so that they know exactly what the business is, how it's structured, what the operating agreements are, all that kind of stuff. Business licenses, registrations, articles of incorporation, copies of contracts with any third parties. If you've been proactive and actually gone out into the market and tested the waters to see if your product or service would be of benefit and have a good uptake in the market, they'll want to know all that too, which is great. It's definitely good for you as a business owner to know this as well. It's definitely not something you should skip by any means. So as you've seen, it's definitely a lot of information, and one of the points of advice that I like to give my clients who are wanting to go the SBA route, whether they're pigeonholed into that because that's their only option, or simply because there's some aspects of the loan that they really like and will fit their goals and strategy. Either way, I always like to say, get all of the applications. So the application's quite lengthy, as you can imagine, going through all this information. But what I like to say is start it very, very early and use it almost like a diary. So your first month when you start, fill it out with everything that you have. And then next month, as you've been progressing through your business plan, you've progressing through reaching out and doing research in the market, etc., and your finances have changed a little bit, go back to it each month and update it like a diary. That way, when you get to the point of actual loan submission and application submission to the lender, everything is up to date and everything is organized and compiled in one neat package. Not only does this help you understand your business intimately, so you know all the details, ins and outs, but it also provides a fantastic and efficient way to get that information right onto the lender. All right, moving on. How to get approved for the business financing. So there's great news that there are many options outside of conventional bank and SBA loans. And this is what I spoke to a little bit earlier when I was doing my own research, trying to fund my portfolio earlier on. Alternative financing is one of the most viable options available today. Not only is it viable, it's essential because most businesses, as you saw with the statistics earlier, most businesses will not qualify for the other traditional financing. So you can get private money, crowdfunding. In addition, you can also get business credit regardless of your personal situation, and that's something that we really like to push because it just makes a lot of sense. I mean, who wants to put up their house for their business and risk losing their house and the roof over their heads for their family? It just doesn't make sense. If there's a different way to do it where you don't have to collateralize all of your personal assets, why not do it? If it takes a little bit of time, again, preparation and planning goes a very long way. So here's what we're going to do. We're going to get into some of these alternative business financing avenues, and then we'll wrap it up. So business financing is based on strengths of the business, not overall strength. It's based on individual strengths. So most alternative sources will lend you money based on your business strengths. So long as you have a singular strength, your chances of being approved is a lot higher. So we like to talk about the 3 C's of lending, and these are the 3 strengths that you'll need at least one of to get approved with these alternative lenders. So you have cash flow, collateral, credit, which is good personal or business. And we can create both if you know how. So cash flow financing is one of the most popular types today. Most ads relating to getting business financing with bad credit, no startups, is a form of cash flow financing. So essentially what they want to see is that you have some revenue coming in each month, $5,000, $10,000 or more, that's kind of predictable, and then they will actually advance money based on that. So merchant cash advances, they'll advance the money on that, or business revenue financing, very similar. Qualification, need to show 6 months of bank statements. Obviously, they want to see that your business has a history and a projected future of replicating this income or revenue that's coming in. These bank statements must reflect, in general, $120,000 annual revenue or about $10,000 a month. And then you can also get your merchant advance that we talked about, $5,000 in credit card revenue monthly. Now these interest rates are very high. These are supposed to be meant for short-term loans to get you out of a pinch or a cash flow crunch, and so they're not made to be a long-term thing. They'll eat you alive. You do need to be in business for 1 year to qualify. Typically, sometimes 4 months is all they'll need. You'll also need to be having more than 10 transactions or deposits per month into your business account, and then no more than 10 non-sufficient funds charges on your business account. And there you go. You should also have a little bit left over each month. Let's see. Here are the kind of terms, loan amounts. You can go back and look at that. I don't think we need to go through this. One thing important, a 500 credit score is acceptable. So because this is all based on the revenue that your business is generating month to month, they're not really concerned about your personal credit score. And one of the reasons, again, is that a lot of these will be an automatic withdrawal or an ACH payment daily, weekly, or monthly, most likely weekly, from your business account to pay for the advance that they've given you. So there's no collateral required, but you essentially have to give them access to your bank account. That way they know that they're going to be getting a payment. They're not going to rely on a busy business owner to make those payments manually. So again, your personal credit isn't a huge factor. You can do this even though you have some issues, derogatory statements, and you can get it fast, sometimes in as little as 72, 24 hours, 48 hours. Cash flow financing, you can go ahead and renew it with more money super fast if you need to, and then there you go, super flexible. I think that's enough said there. Equity investors. It's often said that equity investors are the most expensive type of money you can get because they'll give you money in exchange for a percentage of equity or ownership in your company. And when you start to think about Shark Tank and what kind of demands and restrictions, limitations, differences of opinions, all that kind of stuff plays into the potential for disrupting your business and how you actually want to run it with private investors in equity. Typically 20 to 60%, and they'll oftentimes sit in as an advisor, which is good. If you trust them, trust their history and things like that if they're a similar industry. Private financing serves as SBA fallout financing for loans that are closed but can't qualify for SBA. Collateral is required, although much less. Tax returns for the business up to 2 years or more, so no startups. Executive summary, lenders are looking for average credit 650 plus. Your loan amounts can be huge, up to billions. Loan 30 to 90 days to close and receive the funds for your business. Interest rates are usually around 7 plus, depending on the risk, and that's all assessed based on all the information you provide. Collateral-based financing or asset-based financing is very popular and a very comfortable place for lenders to be in, because they'll always have some kind of recourse if the loan is to go default. So acceptable collateral are accounts receivables or invoices, stocks, bonds, or securities, inventory, purchase orders, and equipment and so forth, real estate, all the equipment, all of the basic stuff that you would think about as collateral. And there you go. Floor plan, that refers to car dealerships, books of business, insurance agencies primarily. Account receivable factoring, up to 80% of receivables are forwarded, which means, let's say you have $100,000 of receivables, they would advance you $80,000. And then here are some requirements: 1 year in business. Most of the time this is a business to business situation or a business to government contract or invoice. Sometimes it's pretty darn difficult to finance or advance a business to consumer, although we do have lenders that will do that. Rates 1.25 all the way up to 5%, and that can be an ongoing thing. So you could have it for years and it just rolls over each time you have a new wave of invoices. Very effective, very user friendly. Here we go, securities-based lines of credit. So you have a stock portfolio, let's say, of $85,000 or more is typically the cutoff, and they can lend and collateralize that stock portfolio without actually liquidating the stock, which is great. You can use it as a personal working line of capital, and you don't have to have perfect credit for it. Inventory loans, minimum inventory loan amount, $150,000. The type of inventory depends based on the lender. General loan to value cost is 50%. So if you have $300,000 worth of inventory, you know they may advance you that $150,000, so 50%. No lumped together inventory like office equipment, etc. So it has to be a like kind. You could think of it like that. Rates are normally 2% monthly on an outstanding loan balance. If you combine that over a year, 2 times 12, so it sounds pretty high, but again, some of these are just meant to be short term, get you through a tight pinch or a reposition. Maybe there's a contract coming up or a change that you need a quick amount of money, and so for a short period of time, 2% isn't much at all. Examples of companies that might qualify include factories and retail stores. Purchase order financing, so $5,000, $500,000. This actually goes higher than that for some of our lenders. You can get up to 90% of your existing purchase orders advanced. You'll be issued a letter of credit, and then that letter of credit will actually serve as the collateral for the vendor or other company who you're purchasing those goods from, so that you can get those goods to your end user. Equipments, we can do a sale leaseback, and that essentially means if you own title, you can sell the equipment to the lender, and then they'll lease it back to you so that you can maintain using the equipment for your business operations, and then also have access now to some cash, working capital. In addition, you can do just a straight lease, and oftentimes they'll value the collateral based on an auction sale or a fire sale value. So it's not going to be what you think it's going to be worth. It's actually going to be what it's going to be worth at an auction. And that's because if you default and the lender needs to recoup their finances, they can take that piece of equipment and get rid of it very quickly and recoup their expense. Again, very easy to qualify. There's lenders in this space who will do C and D type credits, A and B type credits, and as you can imagine, the better credit, the better rates. Loans up to $2 million. Again, that can go higher than that. 401k financing. 401k or IRAs can be used up to 100% financing. You can access those. Rates are usually less than 5%. There's various ways to access these types of qualified plans. This one right here, you are basically investing your 401k into your own business instead of buying stocks in other businesses. That's considered a ROBS, or a rollover on business startup, which is a fantastic vehicle to use. You can actually fund your business debt-free and 100% penalty-free by using that strategy. House flipper financing. A lot of you are familiar with this. Essentially, it's going to be soft or hard money. You get different terms for different people, I guess. Up to 65% of the after repaired value. So if you're forcing a lot of equity because you're doing a lot of good work to the property, you're going to have almost 100% financing, or 100% dollar amount that you need for the purpose and rehab if it's going on the after repaired value. It just really depends. Interest rates are typically, 8 to 18. 18s I think is a little bit high currently for what my lenders are offering. I think we'd knock that back down to about 13, 8 to 13. 6 to 12 month terms, and then it's going to be renewed. Commercial real estate financing. This can be for acquisitions, refinances, construction builds, takeout financing after the construction phase, all that kind of thing. It's based on the performance of the asset itself. So we have conventional, CMBS, or commercially mortgage-backed securities, where they bundle up these mortgages and sell them on the exchange market. FHA and SBA, again, those are government programs. Floor plan financing is a use of inventory of cars or vehicles to get a revolving line of credit. When each piece of collateral is sold by the dealer to the end consumer, the loan advance against that piece of collateral is repaid. So it's kind of a piece-by-piece kind of scenario there. Book of business financing. These are commissions from the book of business that actually serve as a collateral. And this is only used for insurance agents. You can borrow 2 to 3 times your annual renewal commissions, and this can serve any manner of business purposes. Sign and wrap financing, which is it's a niche. Most of you probably didn't even know that there was an actual program for this type of thing. There you go. You can get your car wrapped with a signage. And then we have credit-based financing. Unsecured business credit cards, approval amounts from $10,000 to $150,000. Business credit reporting. These cards will report to your business EIN. However, it is secured or guaranteed by an excellent personal credit profile. So we offer this type of program as well. A lot of times startups use this because they have good credit, but they don't have the other 3 C's, right? They don't have the collateral or the cash. So they've got they've got the credit, whether it's personal or business. And we can utilize that to go ahead and get them financing. Oftentimes these will come with a 0% interest rate for 6 to 18 months. That's going to be an introductory rate, just like a personal credit card. And after that, it's going to jump up to your typical double digits. Use it exactly like your personal credit cards, but it's going to help build your business credit. Personal guarantors are okay. And what that means is that you can actually bring in a credit partner. So if your spouse or business partner has good credit and you don't, you can actually use theirs. Even if they're not affiliated with the business, you can actually turn them into a private money lender by having them qualify for this. Business credit. Now this is business credit that isn't linked to your personal credit profile or your social security number, no, no credit check is needed, no cash flow and collateral requirements are needed. These reports to the bureaus that are linked to the EIN. So what we do is this is where we bring you through the process of building business credit over 90 to 150 days to where you don't have to use your personal guaranteed collateral at all. So this is great. So we start with vendor accounts, then we move to store accounts, and then go to cash credit. And so it's kind of a, like I said, a process. Once we get to the later days, 120 to 180 days for the cash credit, you can start to get limits of $30,000 or more per card, and they're non-personally guaranteed, which is amazing. This is a great catch-all for those who don't have strengths in their business, such as your cash flow, collateral, or personal credit. So you can prepare before you get into business by going through this process, or you can do it while you're in business. You can still go through the process. We've had clients who've been in business for 10 years or more, doing millions of dollars in revenue, and then for some reason, either a customer or another business vendor that they're going to be working with says, hey, you don't have any business credit, we're not going to work with you. At that point, we can actually put them through this process, and they can qualify to then continue on with their business expansion and contracts. So that wraps up this video about how to qualify for credit or financing with no credit and no collateral. All kinds of scenarios. There are options out there, and that's what we do. We like to identify options for our clients, strategize or determine a strategy, which is the best course to move, and then help you along that path and achieve your financing goals. So I hope you enjoyed this. Please catch us again on the next one. Again, Joe Nielsen with Clear Capital Group and the Business Credit Suite.